Hello all, namaste and welcome to our channel Investing Advisors. Today have been a second day of sell-off for the markets. Is the downfall expected to continue from here on? Let's discuss in details. Indian equity markets experienced a significant drop for the first day of April month, with key indices NIFTY and Sensex sharply losing ground due to pressures from IT and banking stocks. NIFTY tanked 353 points, Sensex nosedived 1390 points, and Bank Nifty dropped 737 points. All the major indices were down roughly by 1.5%. Globally, markets are focused on the details of Trump's reciprocal tariffs to be announced tomorrow. The market trends after the announcements will depend on the details of the tariffs and how they will impact in different countries and sectors. Major global markets traded in green today by recovering the partial losses of last 2 days. DAX and CAC closed above 1%. Asian indices were up by 0.38%. And lastly, the US markets are still down by 0.5% as we speak. FIIs continue to dump the large cap stocks. They overall have sold 5,902 crores in the cash markets for today. However, on the other hand, DIIs have bought roughly around 4,323 crores. Now let's discuss from the perspective of indices and looking at the charts, what can we expect for the markets for tomorrow. So as we saw from these levels, the Nifty has actually started plummeting. Now it is almost 5 sessions that we are, on a short-term maybe downfall. This huge candle, which started with a positive note today, and within maybe 15 to 20 minutes of time, we significantly, started seeing the selling pressure, and this selling pressure continued, towards the lowest point. So Nifty closed barely above 23,000, I would say. So tomorrow again, lot of news that is expected to come around on the tariffs. So again, it would be adding a lot of pressure towards the markets. Now, looking at this, somewhere we see at these zones some support that is expected to come in, and if Nifty comes to this zone, maybe we can have some support as part of consolidation. If similarly like today we see a sharp candle towards the downward trend, then we might surely expect that the markets will turn into a bear zone, and then we will start seeing further downfall to continue in the markets from here on. So we have to be quite cautious enough. Anyone who is already short can continue with their short positions. However, fresh shorts, if someone wants to take, maybe the stop can be put at these levels around 23,500 for this week and maybe next week too. So overall on Nifty, now it seems to be very difficult for the recovery from these zones and then start trading at the higher levels. So there are high possibilities that the markets will continue in the downward trajectory from here on. From the perspective of open interest, so we already see a large additions that have been made in the call side. So if you see at every 100 points, there is a huge open interest additions that have had happened. So this clearly shows that at each level of 100 points there is significant resistance that is going to come, which becomes difficult for the uh, put writers to take the markets long or higher. So it's significant to note As long as market is trading at 23,200 levels and unable to close, we can surely assume that this weekly expiry, it is very difficult for the markets to further move up. Looking from the lower levels, we have good support at 23,000 levels, then again 23,800 levels. So of course every 100 to 200 points or strikes, we have support that has emerged. However, comparatively to the way how we have been seeing additions in the call side, we have not seen significant additions on the put. That itself is a trigger that people are expecting the markets to fall, and that is when no one wants to come and buy at the lower levels. So if Nifty continues to fall down, the immediate support is only at 23,500 levels. Moving on to Sensex. Sensex too has sharply you know fell, which translates to around 1300 plus points. Now, if we see all the positive momentum that we had for the entire last week or maybe before to that has been taken down. So we almost have one, two, three, four short sessions or maybe sell off that was seen. Now hereafter, we have already maybe broken those 2% kind of levels from the highs. So further, we can surely expect the downward momentum to continue on Sensex as well. Now we have to be very cautious towards these levels, 75,500 levels, from where we had seen these gap ups getting formed, right? So this would act as some support for the Sensex. If this levels are taken down roughly around 75,500 levels to 75,000, then we can surely see the markets to continue in the downward trajectory and might further go below the previous lows of 73,000. So we have to be cautious in terms of our approach. No long should be taken at these levels until unless markets do not cross 78,000 to 78,500 levels. In between, surely at all the levels, one can go short, like around 77,500, 78,000 levels, and 78,500 levels. These can be continued with the short positions whosoever is holding, even maybe for next week, as long as there are no major shocks that are announced as part of the reciprocal tariffs, and also any war related news that doesn't come in. uh, so continue with the shorts, and no longs, at least until further strong candles that emerge over a period of maybe a week's time. So let's understand from the perspective of open interest. So not sure if this is an adjustment entry, which has been carried over from the previous months rollover. So we have to see, since we just have started with the new series of weekly expiry, that is when there are no much open interest additions that have been done. However, 76,000 levels seems to have a strong support, which is just tad above those levels as of today's closing. Looking at the put call ratio, it is 0.8 overall and 1.33 at the money. So overall, there seems to be a weekly bias that continues even in the Sensex. So we will have to wait from the perspective of open interest, how the additions and at what strikes the additions would be seen. So till then, there is no point in commenting. However, looking at the indices, it is a very clear signal that we are heading towards a continuous downfall from here on, unless there is any surprising news that comes in, be it on the tariffs front, be it any local positive news that comes out uh, from our government. Of course, there is uh, RBI policy that is expected, but it is only going to be in the next week that we will get to know. So for this week, there are no major news, at least from the local front. So we might be following what the global markets, will do ultimately. So let's see how the markets would be opening tomorrow, and if we do not see a strong buying, then we can continue with the shorts. Moving on to Bank Nifty, Bank Nifty 2 had fallen roughly around 1.43%, and there have been significant selling pressure that was seen on all the banking stocks, majorly the heavyweights. Um, from the perspective of previous resistance that we have had, these levels, it was easily taken down. Now this level would act as a strong support. So as long as Bank Nifty is able to hold towards these levels, we might remain little bit of confident that there is no downward trajectory that could be seen from the perspective of Bank Nifty. However, if we immediately sell off from these levels, then it is very evident that markets continue to plummet from here, and then it is always better to continue with the short positions if we have holding upon, and no fresh longs should be taken, at least if we Bank Nifty is able to cross roughly around 51,000 600 to 700 levels. So these levels remain very crucial for the longs and the Bank Nifty to remain positive. So as long as Bank Nifty gets traded in this range, we can continue holding the short positions. From the perspective of open interest, so at every 500 points we see good support as well as resistance, given the fact that there is a lot of additions that are happening, continuing to happen on the call side. However, at the lower levels we see there is still support that is held. If I talk from the perspective of 50,000 levels, and then 50,500 levels, and then 51,000 levels too. Though Bank Nifty was below 51,000 levels, still we have a good support from the put writers, and if they continue to hold and add further positions, we can be confident that there is no significant sell-off that is expected. But overall, towards the April 24 expiry, that is this month's expiry, if the positive news still remains and continues to be there, then there is significant possibility that whatever strength that we are seeing from the put writers at 53,000 levels may remain intact, and gradually the markets can recover over a period of time, maybe in the second or third week of April month, and then from there on there could be a uptrend that can continue. This is again from the perspective of open interest. Open interest will change immediately the way how the market starts moving. So this cannot be considered as a sure shot idea to maybe go long or short 53,000 levels. But yes, some strength is at least seen from the perspective of Bank Nifty derivative contracts. If I talk from the perspective of PCR, it is zero point 0.9, which is okay sort, and at the money it is around 1.02, which is mild positive, is what we can say. Lastly, on the FinNifty, FinNifty have had big red candle, and there was tremendous selling pressure that was seen, which led to a downfall of 2.18% in FinNifty. Uh, so still FinNifty is trading at a much higher levels compared to any other indices, and we are just maybe down by around 2.5% or maybe roughly 3% from the previous 52 weeks high, which was taken down by FinNifty with the last month's last week expiry. So we will see maybe for tomorrow how the Fin Nifty is expected to trade. If it is unable to cross maybe at least 30 to 40% of this big candle, then it is very evident that there is some bearishness that is expected to continue. And then despite there's seems to be some recovery that is happening, maybe from the subsequent trading sessions we can see the downfall to continue in the fin nifty. uh, from the open interest perspective, there is no significant open interest additions that have had happened. So from the perspective of at the money, if we see a good support from the put writers at 24,500 levels, which is just 30 points away from the closing. We evidently saw at 25,000 levels there have been lot of put writers who had cut down their positions, and maybe they would have added towards the lower levels. Additions would have been done at the lower levels. However, if we could see some put writing that has emerged at 25,000 levels, and then a little above, maybe from 24,500 levels to 25,000 500 levels. These 1,000 point range, we have some put additions that have happened, though it is not significant. But yes, maybe this summarizes that towards second or third week of April we might see a reversal in the trend, and there is a lot of additions that has only been done on the call side at 25,500 levels, which is roughly 1,000 points away from here, and seems quite difficult to be uh, you know um, bought off, even though if Nifty continues, Fin Nifty continues to rally from here on. So from the perspective of put call ratio, uh, it is quite bearish. I would say 0.5% overall and 0.75% at the money. So for the short term, maybe this week and even next week, we might see the indices consolidating or continuing their downfall. However, in the subsequent weeks, that is third week and maybe the last week of April month, we might see some buying that could emerge. So we will have to track on daily basis how the markets take those reversals, and with the first sign of that reversal, we can surely go long if all the other data points suggest the same. Lastly, let's talk from the perspective of DII and FII data. So from the perspective of FII, they are continuing to short on index futures. Roughly around 66,578 contracts are open in index futures. On the stock futures, they are still long. However, on the index options, they are long 72,000 positions at call side, and they are uh, three times long on the put options. uh, that says that FIIs are expecting market to fall down. So net net, FIIs are short by 1.26 lakh contracts. So which is quite bearish in terms of uh, for the short term trend, how the markets are expected to move. From the perspective of proprietary traders, they are short on index futures, and they are mildly maybe long on stock futures, and they are significantly short on the index options. 93,532 contracts have been short. So on the call options, they are significantly short. However, on put options, they are short. That means they expect the markets to recover or maybe bounce. However, overall net positions, if we see, they are short by 93,532 uh, contracts. So overall, FIIs are short, and then proprietary traders are also short. Let's now understand from the perspective of retailers, what are they doing. So on index futures, they are long. On stock futures, they are heavily long. On index options, they are massively bullish. So call options, they are long by 1.05 lakh contracts, and put options again, they have short. That means they expect the markets to move up. So net net, FIIs are long, FIIs are short, proprietary traders are short, and retailers are long. So this data points really suggest that there is more pain that is expected to come in the coming days of trading sessions. Now let's understand from the perspective of cash market. So DIIs have significantly added their cash market positions and are long by 4,323 crores. And FIIs continue to sell again from last maybe 3 to 4 trading sessions. They are short by 5,902 crores in the cash markets. So as long as FIIs continue with their short positions, we have to remain cautious. And these short positions are actually taken in the major large indices, or maybe in Nifty and Sensex, or large cap stocks. That is when we continuously see that the indices are plummeting from the higher levels, despite DIIs continue to buy. DIIs could be buying in the broader indices, but FIIs have been shorting in our major Nifty 50 as well as Sensex indices or stocks. That is when we see a sharp sell-off that has been seen in the indices. So that's it from the open interest and the derivative contracts perspective. So until tomorrow's trading session, kindly be cautious with all your long positions, and trade with the risk management, and by taking the hedge positions. Uh, Track the markets on daily basis, which will surely help you to understand how the trend is shaping up, and accordingly the positions can be taken. So until then, thank you. Have a great day.